How extensive, David Rosenberg, can our disinflation be?
Well, I think that the disinflation momentum, which has restored itself after some of the earlier distortions, is going to surprise a lot of the what I call inflation phobes. I think we're going to finish the year very close to 2% on headline inflation. And the way I'm seeing the aggregate supply, aggregate demand curves behaving, I think we're going to get down towards 1.5% by the end of next year.
Wow.
So, David, what drives that inflation down? Because if you talk to the folks on the street, they're saying, "Boy, my supermarket and the gas station, I'm just not seeing it." What's going to be taking us down that route?
Well, I think the problem is that people tend to conflate prices with inflation, and inflation is
Yep.
not the price level. It's call it the year-over-year percent change in the price level. I mean, look at Paul Volcker, um, in the Hall of Fame of central bankers, for being the greatest inflation dragon slayer of all time. But nobody calls him the CPI dragon slayer. Prices never went down under Volcker. In fact, the CPI in a 7-year tenure went up 40%. What he's renowned for was taking the inflation rate down from 14% down to 4%. So yes, prices are high,
Right.
undeniably, but the rate of change is dissipating. We had a couple of earlier quirks. Let's face it, a lot of it was auto insurance in response to the lagged run up in claims. That seems to have run its course. The rental measures are taking their time subsiding, but we know that that's staring us in the face. My analysis is just strictly top down. It's really looking at where's the output gap today, and then what's your forecast on how the aggregate demand and aggregate supply curves are moving.
But then, David, what is this Fed going to do? You are a great student of the history of our central bank, and there's this absolute delusion I see that the Fed can get out front. Don't they, by definition, have to be dramatically ex post and wait for the Rosenberg disinflation?
Well, I don't think that they have to wait. I think that the Fed is still somewhat shamed for having missed 9% inflation in the summer of 2022 and leaning so hard on transitory, although 18 months in real time doesn't sound transitory, but in the overall annals of economic history, 18 months is still pretty transitory. But they still seem to be fighting for their credibility. When they talk about that they need more confidence, just saying that they need more months or many more months of the disinflation trend that really dominated most of last year. So I think that part of it is just basically the horrible memory of what happened in 2021, 2022, and blowing the call. And that's one of the reasons I think that they're going to be deliberately slow to start cutting interest rates. But I think when they do, they're going to be pretty significant.